Okay. Good morning, everyone. I'm Eric Mouth. I'm president of Jushi. I'm a founder as well as a board member. And so what I thought I would do today is I'm not going to actually kick off with just the presentation. I wanted to give everyone a little bit of background. I think at a conference like this, if I were an investor, what I would be asking the question is, what is the differentiator between one company to another? So I think the important thing to do here is to start off on how Jushi came to fruition. So effectively, we started investing up in Canada about 5 years ago on the private side. Jim Cacioppo, the CEO, is a former hedge fund executive out of New York. He now lives in Florida. He runs his large family office. And we found the industry intriguing up in Canada 5 years ago. It was effectively, in our opinion, a company-specific industry that you needed to understand each company, but more importantly, capital and capital allocation were clearly aspects of the industry that were very difficult to address. 3.5 years ago, we started looking at the US, and the US industry, in our opinion, was a distressed industry. And we used to say it's a distressed industry, it just doesn't know it. And part of that is, the capital needed to build out the footprints that are required state by state is far in excess of the available capital that is currently around. And so we always thought that this was an incredibly interesting place for people with capital accumulation backgrounds like myself, 20 years, 25 years on Wall Street, raising capital, and then allocating that capital like Jim has done for years in the distressed world. And so the accumulation of the skill sets that we had, as well as what we thought was a really interesting industry, drove us to create Jushi. And so I'll go through kind of those founding principles for us were the following. One, we believed that this was an industry that was going to be short capital and would continually be short capital until we had some federal normalization. Number two, we believe pretty strongly that this industry would have a high degree of misappropriation of capital over time. You see it in any great growth industry. People tend to misappropriate the capital. They assume that capital will be much easier to come by. And then over time, what will inevitably happen is you'll start to get these capital shortfalls. We kind of feel that's where we are today. And then I'd say the final thing, when we looked at the industry, I always use this very basic statistic on why we thought cannabis was so appealing, is when you look at some of the forward projections, it's an assumption that the US cannabis market sometime in 2025 to 2028 will be in the order of $75 billion. I'll leave it up to whatever you think that is, but I'll use $75 billion as a starting point. If you assume that we can do a 20% EBITDA margin, that's $15 billion, a food and beverage multiple of 15, this could be a $200 to $250 billion industry that emerges over the next decade. We thought that was a very appealing place to start to put capital to work. And so with that, I will open it up to a general presentation if I can figure out how to do this. But yeah, there you go. So as a backdrop, this is Jushi. One of the first things that we did as a company was to create a very talented and diverse board. We thought it was pretty important for us to have people with extensive capital markets expertise running a company like Jushi. To put into perspective, the way we think about Jushi is we think there really are four legs to the stool. Number one is you need to run a regulated, compliant business. Everyone at Jushi has spent a career in regulated, compliant businesses, so we felt we were very comfortable in being able to run that business. Number two, between Jim Cacioppo and myself, we have raised hundreds of billions of dollars. We had tremendous access to our own capital as well as third-party capital, so we thought we could raise capital that people would back us with our track records in an industry like this. I think it's important to note that of the 138 million that we have raised to date, 25 million of that comes from investors who are insiders. So insiders have participated in every round. I think there's a big differentiation between us and many of our competitors is we've never gifted ourselves penny stocks. So every cent that we've put in is to be purchased at market prices. And that is really, again, allowing us to align Jushi with shareholders. We think that's really important. We found as private investors there was often a dissymmetry between where we were putting in capital and then the amount of equity upside that the initial investors were getting. So we wanted to align that. I am going to jump through some of these slides because I only have 20 minutes, but I think this is a really important slide to put at. Give you a construct of how we think about the industry. We think corporate governance is critical. We think capital allocation and risk management is very underappreciated until maybe the last 6 months. You can raise as much capital as you like, but how you deploy that capital is critical. And I think one of the real interesting things about Jushi is we have about a 30-person, I'll repeat that, a 30-person deal team. We have five people that originate deals, that go out and find deals. We have a 6-person M&A team that actually executes the M&A deals for us, that have 150 years of M&A and distressed experience already, and now have cannabis experience as well as M&A experience. We have a 6-person legal team, including a full-time litigator on staff, to allow us to document at the state level correctly. We have a 13-person, 13 people in our accounting, including forensic accountants, so that every acquisition we do, we can go and do forensic accounting, because inevitably, unless it's a public company, they will not have audited financials, which will require us to come back with our view on the financial status. Deal structuring. You've seen a number of deals fail in the market, some of them very public. We think structuring deals in the cannabis market is of paramount importance. Why is that? One, you want to be regulatory compliant, but more importantly, in the event of something going wrong with that deal, you are going to be relying on your documentation in how that deal works itself out. And having a distressed background allows us to build into every deal we do documentation that's going to favor Jushi in the event, the unlikely event or likely event, that something goes wrong with that deal. An effective valuation. One thing that we haven't talked about is our 8-person analyst team, all Wall Street associates and VPs that do nothing but market analytics on every single market we go into. For you who may not be that familiar with market analytics in cannabis, it doesn't really reside in a Bloomberg database. This is something that you as a management team need to do yourself in order to secure factual information about every market you go into. It's not readily available. And then operational excellence. I'd say if you look at the management team, we all have had incredibly successful lives prior to Jushi. This is not our first rodeo. Many of us are independently wealthy. And so what we have really tried to do is take all the experience from our former lives and to create a really interesting business within the context of the market today. I think this is another important aspect. I'm trying to give this audience a view on how differently we view the cannabis market to maybe some of the other presentations. For us, it's all about deal structuring and all about capital allocation. That is our background, so we don't actually know how else to operate. But when we look at something as vibrant, dynamic, and uncertain as cannabis, we can't do anything but rely on 20 or 30 years of experience of investing on how to discipline ourselves. So the way we look at the markets is the ultralight capital intensity. What do we mean by that? We have a 7-person applications team. We're going to have 25 applications for new licenses, some of them merit-based, some of them lottery, but that is ultimately the most accretive way for us to accumulate licenses. Capital light, we will buy single assets. An example would be a newly won license in a California market where the applicant has not the funding to build that out. To us, that's an ability to accumulate at less than 0.5 to 7 times forward sales. We find that very attractive. The medium is we buy 1 or 2 states where they have either vertically integrated or multiple licenses. One of the things that we find most difficult about that is the diligence. Diligence on 4 or 5 assets takes us an incredibly long time. Most of the time because you have to do the forensic accounting, you have to look through all the documentation associated with it. There's often litigation or fighting parties when we get brought into a situation like that. And so we do those less frequently because of the time drag on our business. And then what we call capital heaven. That would be something that's like a vertically integrated market. A good example for Jushi is Virginia. We are one of the 5 licenses in Virginia. That is a vertically integrated license. You're required to cultivate, extract, and dispense out of a single building. That requires a very large capital expenditure in order to get that up and running. And that would be something we would do less likely. So what you see is a very measured approach, a typical risk-adjusted asset allocation approach to how we think about the business. And we do it with tremendous amount of analytics behind every decision we make, be it from traffic count, be it from population adjusted, and then be it just how much capital we're putting out and what is the velocity of that capital coming back to us over time, so that we have built up a portfolio that is a mixture of all of those. This is the current footprint as of today. I will go through this relatively quickly, but just to run you through, 138 million raised to date, 25 of that from insiders. We have 25 retail locations that we can open, 2 cultivations, 3 extractions and processing, and we're in 4 different locations. As you can see from this slide, Jushi is a retail-heavy company. We are incredibly enthusiastic and supportive of what we think is a great strategy, is owning high-value retail locations. We call that distribution. And we'll come back to that, how we think about it. We also like extraction and processing. We think that's high value. It costs a lot of money. Our partners, the company that we purchased out of Colorado called The Clinic, we bought all of their expertise, their people, 15 of their top cultivators, extractors, COOs on our part of Jushi. We own all of their SOPs, their brands, and all of their trade secrets outside of Colorado. That is our operating team. That team, under a brand called The Lab, are really extracting experts. And so extraction and processing are a very big part of what we are delivering to Jushi as a business. And then we're in cultivation when we need to be. We're just going to be structurally light cultivation. I'll come back and explain that to you in a little bit more detail. But to go through this, where is Jushi? 1 of 5 in Virginia, 15 stores in the state of Pennsylvania. That is 10% of the market, which is the legal limit. There's 150 stores that have been allocated. It's a fantastic portfolio of us. 9 of those stores are in the greater Philadelphia region. Allows us to put 3 stores in downtown Philadelphia. We have 2 open. We get to put 3 stores around Pittsburgh and 3 stores around Scranton. We currently have 5 of the 15 stores open. Hope to be 9 or 10 by year end, and all 15 by middle of next year. Then in Ohio, we have extraction and processing. In Illinois, 2 retail assets. I can't go into too much detail about those due to a litigation settlement around that. Colorado is where our corporate operational expertise sits. Why did we choose Colorado? We think it's still the deepest market for talent. It's been an adult use market for the longest. And we purchased The Clinic, which is out of there. So we really think that that's a fantastic place. And it's geographically can service our big markets in Virginia and in Pennsylvania. It's not far from Illinois, and Nevada and California are easy to get to as well. In Nevada, North Las Vegas, a distressed situation. We own a small cultivation as well as extraction and processing that we're building out. And then our next biggest market is California. We are very, very deep in California. At this stage, we have 4 stores, all high-value locations, awaiting regulatory approval, and we have another 4 stores under LOI. The desire at Jushi is to build California to north of 20 stores, all in high-value locations. The 4 stores we currently have, we have one of the 30 licenses in San Diego. 20 of those are open. Real estate's very difficult to procure. We have one of 3 licenses awarded in Culver City. That's a recent award. And that's a fresh build, ground-up build, fantastic location, Sepulveda in Venice. And then we have one of the 2 locations in Malibu. That's a distressed situation that we're working through, again, using our distressed background. And then one of the 3 up in Santa Barbara. I use this graph to really run my investors through how we think about velocity of capital over time. So what this graph is clearly, on the left-hand side, the further left you go to Virginia, that's a recently awarded medical market, so that's going to take time to ramp up. I put Massachusetts in there as an example of a state that has just gone recreational, and you're starting to see the bump in sales. And then I take California, Nevada as adult use to give you an idea of where we think sales are still growing but are going to start to plateau. And what we've done as a company is a measured approach. We want to be long the high volume markets like California and Nevada, where adult use sales are robust. And then we want a bunch of options of states that are in the process of going from medical to adult use. And that, for example, is Virginia, Pennsylvania. The governor just came out and is talking about wanting to move to adult use. And so it's a measured portfolio that's going to grow and also grow over time. So we're not just buying sales at 1.5 or 2 times revenue. We're not hoping to have a portfolio that's purely medical that's going to evolve into adult use. It's a mixture of those 2 licenses. I think it's really important to talk about our application team, because ultimately as investors, the most accretive way for us to accumulate licenses is to be awarded merit-based and or lottery licenses. Emily Cohn is part of the acquisition out of the clinic. Emily has been applying throughout the states for the last 7 or 8 years. She's probably won in north of 20 markets. And this gives you an idea of all of the markets in which we are either applying or have applications outstanding. There's my pipeline of 25 applications that we should be submitted in the next 12 months. You can see it's very heavy in California, which is our focus, and then many of these other states, which many of you have heard about, where we know that applications are either coming out or already in the works. An example of that is New Jersey. We're waiting to hear what the results on that will be. This is an example of our retail store. So many people ask us, what is our brand? The brand of our stores is going to be Beyond Hello. Beyond Hello is the company that we purchased the store name in Pennsylvania. We like the look and the feel of it. And that was a brand that we will be rolling out across the US. We always preface this to say, if we are lucky enough to get a really great location that has a tremendous local following, an example would be our San Diego store, we are not going to rebrand that just to rebrand it. It's already doing tremendously well. It's got a strong local following. We will just maintain that local name, and we will consider rebranding it down the road. It's just a waste of money and time to do that, and why would we disrupt a winning formula as already exists? On CBD, we do have an extraction and processing license in the state of New York. We won that in a merit-based application in January, and we're in the process of thinking through and negotiating, building out extraction and processing in New York. We are still bullish on hemp. We think that you want to be short cultivation. We think there's going to be excess biomass throughout the US in at least 2019, the end of 19 through 20. We think there's going to continue to be demand for our in-house products, which are isolates, distillates, and full-spectrum oils. And we think there's a massive shortage of extraction, processing, and refinement, which has been really impacted by the capital constraints of the last 6 months as that industry was coming into its nascency. This is just to go through us as a company. It runs through the financials. We have 107 million shares outstanding as an as-converted basis. And then it shows the fully diluted share count of 175. I wanted to just go through one more slide before I open it up to questions. You know, when we came public in Canada, it was very interesting to us. So this was kind of towards the back end of the bull market in April, May, and June, when we insisted on wanting to show investors the size and depth and quality of our team. Our investment bankers in Canada just did not understand why we would want to do that. Their view was this was all about footprint, size of footprint, how big you are, how many markets you're in. And we could not have disagreed with them more. We actually think this is all about the quality of your team, your ability to risk manage your capital, and to put that capital to work in a very thoughtful, risk-adjusted manner. And so when I go through the team, it really is a star-studded team. You know, Kim Bambach comes to us through 3 or 4 prior startups. She's a fantastic CEO. The company is way too small for her at this stage, but we're rapidly growing into her capabilities. John Barrick, who's in the audience with me, is a co-founder. John has a long, extensive M&A and distressed and research background. He most probably is as knowledgeable about the industry as anyone here. Emily, who I talked about, runs applications for us. Ryan Cook is well known in the industry for his capabilities on extraction and processing. Brooke Gearing, who is an advisor to the CEO, is one of the foremost women in the business. She's been operating for north of a decade out of Colorado, many of her own companies. Many people in this audience potentially know who she is. We think that's absolutely critical. And we have people like Lisa Foreman, who runs IR for us. And it just goes on. You know, Toby is a top litigator in the sector, as is Matt. Steve Pesabola runs our medical division out of Buffalo, New York. Trent Wolvack, who is in the audience with us. Trent has been in the business for a decade. Many people in this audience do know who he is. He was really here. He's one of what he likes to refer himself as, I think it's called an OG or something like that. Anyway, my point is it's a very deep team, and these go through the markets that we're in. And so with that, I'm down to 2 minutes. May I open it to questions?
Thanks. I was looking at your management team and their qualifications, and I didn't see anything about security, any of the management team having any depth in the field of security. And as I understand the different licenses, they weigh that very heavily in granting the license. So how do you go outside to security companies, or how do you do that?
Yeah, from security, it's mostly in-house. It's all going to be run out of Colorado. The building in Colorado has a room that will have 24-hour surveillance on all of our assets. And we've also, one of our first employees was a 13-year Navy SEAL who has spent a lot of time and effort walking through our protocols around safety. And we don't talk safety just about the cameras and the locations. We also talk about how to deal with stressful situations in the event that we get an unfortunate situation at one of our dispensaries. So it didn't show up on those slides, but it's not because of a lack of importance.
Any more questions? Is there one over here? See if I can make it over. Big reach.
That's great work. Thank you. Yes, just wondering if you could speak a little bit about your team's experience at looking at acquisitions in markets that aren't open yet, and how you come to your valuations of these, addressable markets, if you will.
Sure. So if I may just restate the question you're asking, in a market that, like Virginia, which has got nothing going on, how do you value what to pay for Virginia and how much to invest? That's an excellent question. There's a reason we only have one of those in our portfolio. because they are difficult. But let me run you through Virginia as an example. So there are 5 licenses in Virginia. Each of you are allocated a region in Virginia, and you need to service that region. Our region has 2.5 million of the state's 9.3 million people in it. There are no other dispensaries in that region, and delivery is allowed, and each license is permitted to only deliver into its region. So I have the most populous region with 2.5 million people in it. I can deliver to all 2.5 million people. And when we run our metrics on traffic count, size of population, and we see historically what has happened when a market has gone from no cannabis at all to a medical market, the ability for us to utilize Dr. Laszlo Metzler, who has the largest cannabis clinic, he's our lead physician, to be able to get physicians to write formula or to write recommendations in in Virginia, will drive it. The program in Virginia is actually quite friendly to physicians. You don't have to actually write a recommendation for a specific cause. You can just generally write it. And so we look at that and we make assumptions on what we think the growth of a market like that is. But it's not easy to do, and there's a reason that we only have one of those in our portfolios. But for us, it was very simple. Big market, high concentration of people, best geographic region, 2.5 million people, and only one dispensary for 2.5 million people.
Those are all the questions we have time for.
One more? Are we done?
One more?
Thank you very much, everyone.